back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. Alright guys, let's hop into the charts, and today is Sunday. It's about 6:45 p.m. Eastern time, and the candle closes for the week in about an hour and 15 minutes. Now, we've been going over this all week. We need to make sure we stay above this white line, the 21-day moving average, which is currently at 92,323 to remain bullish. Bitcoin has dropped down recently. It's below 95K at the time of this recording, is 94,842. So we have a good buffer of about $2,500 or so before we lose the 21-day moving average. We need to make sure we maintain that and close above so we could have at least two candles confirming. And right now the stochastics do look low, and it looks like we're on the way up unless we roll over here. So right now I'm still bullish for what's happening in the week as long as we close above the 21-day moving average. If we head over to the daily chart, what's bullish here is that the 21-day moving average finally crossed the 200-day moving average. I've been talking about this for over like a week and a half, and now that this is crossing, this makes it bullish. We are still far away from the 21-day moving average. The stochastics here are toppy. I've been telling you guys they could drag for a while, and like around over here I was saying it looks like we're gonna curve up and do another hump. I expected the hump to maybe be a little bit higher, but actually that's it, it already started rolling over. So it looks like we might be heading down. What's important here is for us to maintain also above the 21-day moving average and above the 200-day moving average for sure. The 200-day moving average on the daily right now is at 90,285. We're getting a red candle for the day. Again, in about an hour and 15 minutes this closes. So as long as we stay above the 21, it's okay if we fall all the way down here and then we bounce back up, or we continue going sideways and have the white line touch. Once the white line touches, unless we're super bearish, I would expect a big movement up, but we're gonna have to probably give this a couple of days because the stochastics do look like they want to drop. Now if we head over to the 8-hour chart, you can see the stochastics are starting to get low. We already lost a 21-day moving average here, so it looks like we're headed for the 50-day moving average, which is at 92,555. We need to bounce up from there so we can reclaim the 21-day moving average in order to stay bullish. If we take a look at the 4-hour chart, we lost the 21-day moving average, and we have a big red engulfing candle happening right now, and this closes in about also like an hour and 10 minutes. The only thing bullish here is that the stochastics are low. These might drag here a little bit, but eventually it looks like we might come back up at least to retest that 21-day moving average. To remain bullish, guys, the 200-day moving average is currently at 87,562. We cannot lose that. We lose that, then that means that we also lost it on the daily, because the daily is higher. The daily is at 90,000, and if you lose it there, that means we also lost the 21-day moving average on the weekly. So the only thing that's gonna save us is staying above this 200-day moving average on the 4-hour chart, because so far we lost the 21-day and we just lost the 50-day moving average. Now I have this inside of a flag here, and as you can see, it was going sideways and we kind of broke out here, and I made another flag thinking that it's possible that we could continue going up, but it looks like we broke out of the flag and got back into the original flag pattern here. So maybe we don't go any lower. Maybe we just bounce off of this 80-day moving average, which is at 94,306, and then we reclaim it. So what looks like it's happening here, we're gonna change now this flag, and this kind of looks like it's a falling wedge now on the 4-hour. So we're gonna switch up this pattern based on what's happening now in real time, and now we're going to have a new measured move. The original measured move of the first flag was about 100,000. Now this is probably gonna go lower, and this is probably gonna take us now to about 99,500, which I expect to be some resistance there. So it could make sense that we come down a little bit, stay within this falling wedge, and then as the stochastics go up, we probably now do play out this measured move. Time will tell, guys. Let's see what ends up happening. And let's take a look at the 1-hour chart. And in the 1-hour chart, we lost a 21-day moving average. Now remember, last week Sunday I gave you guys a big lesson. I told you guys you got to start from the minute. If in the minute you start losing the 200-day moving average, that's bearish, and we lost the 21-day moving average here. Then you're gonna start losing it on all the other time frames. As you can see, we lost it there on the 3-minute, on the 5-minute, on the 7-minute, on the 15-minute. We lost it. If you lose on the 15, then it's gonna start dragging to the higher time frames. The 30-minute, we lost it. Last week, what saved us was the 45-minute. We just lost it now, and now this is starting to get bearish because we just lost it on the 1 hour. Even though we're wicking a little bit back up, and now we're in this new pattern of the falling wedge, we basically bounced off the bottom of the pattern. The stochastics are starting to get toppy, so we need to start reclaiming some prices here, or at least start going sideways and finish filling out this flag. So the next time frame now is the 2 hour we have to watch. We can't lose 92,648, because then we lose it there, we have to go to the 3 hour, which is at 89. But if you lose it in the 2 hour, then you're losing it, like I said, on the daily, and you're also losing it on the weekly, because the weekly 21-day moving average is at 92. So we cannot lose this 2 hour 200-day moving average. This is going to have to be our savior. It looks like it could be, because we're bouncing up off the falling wedge now, and the stochastics are low. So guys, my sentiment right now is it looks like we're going to drop a little bit, just because we do have high stochastics here on the daily. I was talking to you guys also about this bearish divergence, which it looks now like it is playing out. If you see this red line here is going up, this red line is kind of flat, that's bearish divergence. So it makes sense for us to drop, as long as we don't go below 87k. For right now, when we hold this 200-day moving average, we should be sort of safe. We have to see how things play out. I will start getting nervous if we start losing the 200-day moving average on the daily, which is 90,286. And obviously, if we lose a 21-day moving average on the weekly, it's not going to be good either. But we have to close above that, and then even if we go down next week, what matters is the next weekly candle close. All right, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or a crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.